With record levels of monetary stimulus all over the world, investors are looking for alternatives to fiat currency as a store of wealth. What does this mean for cryptocurrencies? Joining me to talk about this today is Michael Casey, Chief Content Officer of CoinDesk and founder of Streambed Media. Michael, welcome to Kitco News. I'm glad you're able to be here today.
Thanks for having me, David.
So if you look around the world, we're seeing really unprecedented levels of quantitative easing, not just in the United States, but also in Europe. Can you see cryptocurrencies like Bitcoin challenge fiat currency as a means to store wealth?
Yeah, certainly as a store of value opportunity, I think that's very true. Bitcoin, I think, for various reasons, struggles to function as a payment vehicle. Certainly the Bitcoin core, the main Bitcoin denominated asset that we focus on, and as a result, it's for the time being at least, its primary focus is as a store of value. And I think, look, we are moving inexorably into a more digitalized world, and we're also seeing fiat currencies become digitalized. There's China and others focusing on central bank digital currencies. There are other forms of stable coins that are sort of fiat denominated. And in that environment, I do believe that an alternative kind of depoliticized store of value, one that whose monetary policy lives outside of that sort of traditional national currency driven model, is something that becomes a viable hedge, a viable alternative, just as in the way that gold has always played that role in the analog world. There's a kind of function that, in this era of uncertainty, in this unprecedented increase in monetary stimulus, and a lot of the big sort of geopolitical risks that float around the world, the idea that this is, in effect, a kind of digital gold, I think is a compelling one.
Okay, we're going to be talking about stable coins in just a minute. I'd like to go back to something you just previously said. What do you think are the limitations of Bitcoin as a form of payment?
Well, it still faces scaling challenges. Certainly if transactions to go on chain, that is to say that every single transaction is to be processed in what is a fundamentally constrained ledger, the blockchain itself, it just becomes prohibitively difficult and therefore prohibitively expensive to do massive numbers of transactions. And so anything coming close to what the global economy would need to function that way, on-chain Bitcoin transactions just simply aren't doable. Now, there's really interesting what we call layer 2 solutions that are built on top of Bitcoin, the most well-known of which is called the Lightning Network, and that's got a lot of its own development to do. And so and certainly we're starting to see Lightning be used for microtransactions and things that are allowing a much more fluid and lower cost transfer of value, even at small amounts. But there's just a lot of development needs to go on. There's just these systems are still quite new. They're very, very complicated. You've got to build these human networks as well as these computer networks and have all of these protocols work in efficient ways. And so we still have to see whether that functionality can apply. But the other problem is, at least for now, and this is often chicken and egg in terms of a problem, is that Bitcoin, of course, is volatile. It's not something that people naturally think of as the denominating currency that they price. Doesn't occupy the mind share of how we think about something as valued. We still think in dollars, or we think in yen, or we think in pounds. And so, for all those reasons, Bitcoin is just not a comfortable medium of exchange in that regard, as well as the fact that it's just, as I said, chicken and egg. It is volatile. It moves around a lot, and if you're thinking in terms of dollars rather than Bitcoin, that volatility is very difficult to think about when your grocery bill can swing 50%, in a very short period of time. So, at some point that value may become more stable the more demand there is, and there's a thesis that says that if we, as the store of value use case is essentially taken up, eventually stability comes, and then we get to some level where it takes over as a payment vehicle. I'm not so sure that it will. Either way, it's still got a long way to go before it could ever.
Right. It's been 10 years, Michael, since the first purchase was made using Bitcoin. 10 years ago in 2010, 2 slices of pizza were purchased using Bitcoin. And those were the very early days of the cryptocurrency. We've obviously progressed a long way since 2010. What are your projections over the next 10 years and how demand for Bitcoin will change on a global level?
Yeah, as I said, I think it plays this important role as a counterpoint to all the other digitalization trends that are happening, especially in money. So I certainly think that Bitcoin will play a key role in. I'm hoping the kind of personal choices that people make to hedge themselves against a lot of the uncertainty that exists in the world. I think it will play a role in institutions as well, that they will hold some store of it in that capacity. And I think that you may even find certain governments tend to use it. I also think Bitcoin could play this really interesting role as a source of collateral. And therefore, building lending systems on top of that. There's also interesting synthetic models that use Bitcoin as essentially the rails around which stable forms of value can get moved around. And within that environment, you start to see Bitcoin emerge potentially, these are very, very early days, as a kind of an automated way in which we can, in a relatively liquid environment, and one that is controlled in a decentralized function. So there's smart contracts that actually deliver collateral and make margin calls against it, and give greater protection, if you like, to counterparty risk. That you could build credit systems and various other things could emerge on top of that aren't necessarily denominated in Bitcoin, right? So there's this potentially powerful role that it will play as a kind of an underpinning reserve asset, not so much a reserve currency in the central banking sense potentially, but as a reserve asset upon which other forms of financial innovation can be developed. I think that's a very exciting and interesting way to think about Bitcoin's role, because it proves itself already as a sort of a pretty major liquid asset in the world. Even if it's not necessarily particularly stable in and of itself, it has this unique capacity to be cleared in a decentralized way, and that's extremely valuable to the financial system.
Just on that note, Michael, on government usage, I'm going to read a quote from former Federal Reserve Chair Janet Yellen. She said this in a conference in 2018, and she said, "I'm not a fan of Bitcoin. Let me tell you why. It has long been thought that for something to be a useful currency, it needs to be a stable source of value, and Bitcoin is anything but. It's not used for a lot of transactions, it's not a stable source of value, and it's not an efficient means of processing payments. It has difficulties because of its very decentralized nature." Basically, she's saying that the Federal Reserve is unlikely to adopt the use of digital currencies anytime soon. Do you agree with her assessment?
Absolutely. The Fed's going to be the last institution to ever do that. When I talk about governments, I would talk about, the most interesting place to look at the use and the use proposition for value is not in the United States. That's the least important place to be looking at. It is the developing world. It is places that have completely broken financial architecture, where Venezuela right now, the government threw up its hands in trying to manage the demand for dollars. They hate the dollar because it's the symbol of the enemy, but they've got no choice because there's no functionality whatsoever around the bolivar as a trading vehicle inside Venezuela. So they threw up their hands and they reluctantly, dollarized the country in an informal way. You can imagine places like that, right? I'm not sort of condoning this horrible government in Venezuela to be somehow a model for what should happen, but you can certainly see how in certain places where there's an incoming government that just says, you know what, we need something that's sort of going to back this system that allows us to move more efficiently money around the world. There's dollar shortages everywhere right now in the middle of this pandemic. It's a major problem for so many developing countries. You could imagine an environment where a digital payment vehicle, a stable coin or something like that is built upon a reserve of Bitcoins that a government could hold. These are just, these are imagined concepts. I'm not saying they're necessarily going to happen. The instinct of every central bank at the moment is to think in fiat currency. That's their DNA. But I just think that we are in unprecedented times in terms of the challenges that are faced. And there are some very, very interesting ideas floating out there that a number of, I say smaller developing countries with very specific problems could quite be attracted to this, to that as one of many options on the table to how they would sort of back up their financial system and give it more stability and also fluidity that it's missing.
We've seen smaller developing economies in the past peg their currencies to the US dollar or other sources of stable fiat currency. And what you're saying is that basically in the future, they may adopt Bitcoin or cryptocurrencies as a backup. Why would you think that they would lose confidence in the US dollar in lieu of the rise of Bitcoin?
I'm not actually saying that they would use the Bitcoin as a peg per se. I'm just saying that they would have it as an underlying rail upon which other transactions could take place. But certainly, I do think that at some point it seems kind of almost counterintuitive, because at the moment demand for dollars is higher than it's ever been. This is what we always see in the midst of a crisis. The dollar is sought after because it's the liquid currency of the world, and there's a massive margin call that happens when you're in the midst of a crisis, and so you need dollars, and then the Fed just pumps more dollars into the world to facilitate that demand. But all of that creates these dependencies that ultimately is a very broken system. If you look at the speech that Mark Carney gave, the Bank of England governor, last year at the Jackson Hole summit, he talked specifically about how that dependency is rather toxic, that the world is caught in this demand. And I believe that as new technological solutions emerge, and I'm not necessarily talking about Bitcoin, I'm also talking about central bank digital currencies and a whole lot of other things, central banks and others are going to find ways to finally say goodbye to the dollar. Right? It's a very reluctant dependency that China and everybody else has on the dollar. And this is a major challenge to the United States, because the dollar is fundamental to how it functions in terms of its geopolitical status in the world. So, yes, it seems counterintuitive, right? The dollar is the thing everybody wants, but it's also the thing lots of people don't want. And you can imagine a kind of a convergence of that crisis problem along with the arrival of new technological solutions such as China's CBDC or even Libra or various other options, creating a sort of a pressure point in which there could be a departure from that. And then in that environment, everything's open game, right? And sort of certain developing countries may not want China's. They may not want. There's various options on the table for how you would, I suppose, innovatively reimagine your monetary system. I used to live in Argentina, and in the midst of that crisis there, state governments, provincial governments were issuing their own currencies because they just simply they had nowhere to pay their employees, because this was back in the early 2000s. And so they issued things like patacones, which was a currency out of Buenos Aires province, and it became a circulating currency because the system needed it, right? So you get these really innovative moments in the midst of crises where money takes on different forms, and I really think that these things are going to, it's a very unsustainable situation right now, and that ultimately a lot of outside the box ideas will be embraced that will be directly related to the technologies that were unleashed by the presence of Bitcoin, if not by Bitcoin itself.
Let's go back to what you said earlier. Can you tell the viewers a little bit more about the development of stable coins, what they are, and their implications for the cryptocurrency market at large?
Yeah, it's probably the most important trend of the moment, in certainly in terms of developing ideas and technologies. So a stablecoin is a little bit like a pegged currency, right? So the Hong Kong dollar and so forth. The idea being that somebody, in Hong Kong's case, the central bank, holds a store of the currency to which your native currency is pegged in terms of its value, and commits to hold more than that amount, or usually, hopefully, more than the actual circulation of the native currency itself. And that's how you maintain the stability every time there is a new token that is created. It has to be backed by an amount of dollars, and this is now happening these are companies essentially that are doing this in terms of that reserve. So this is one model, by the way, of stable coins. There are other models as well, but this particular model is a reserve-banked model. And so now we have these private companies who are taking in dollars from people who want to buy one of these pegged tokens. They are held in reserve. And the idea is that they then commit to redeem at any given time. It's like a gold window, if you like, for that value, the token that you're holding. And at that moment, if you do redeem, the token gets burned, it gets destroyed. So there's always this parity, if you like, between the value of the coin. Those tokens reside in a blockchain environment. So they take on the qualities, at least in theory, of things like Bitcoin, which means they can be traded peer-to-peer without and have that sort of software programmability quality, which is one of the coolest things about Bitcoin, that you can, plug it into machine-to-machine payments and make it part of a smart city solution or whatever you want. There's now this digital form. And it also means that like shortages of cash, which we're seeing all over the developing world at the moment, potentially don't matter. If I can use this tokenized value and, somebody has sent it to me from the US to Nigeria, and now I have something that the system is recognizing as trusted because it's got a smart contract behind it that can't be manipulated, and therefore I can trust the one-to-one redeemable parity that I was talking about. This thing starts to emerge and potentially be part of a full payments network. That's the dream, right? We're not seeing it on a large scale, but we do know that a version of this called Tether, which was created some time back, and a rather controversial one because people are not so sure about whether or not how real the reserves are behind Tether, nonetheless is used extensively in the cryptocurrency exchange market. So cryptocurrency exchanges who take in funds from their users and sit on them and then trade back and forth whenever there are multiple redemptions and settlements happening within the system, use Tether as a much more efficient way to manage their fund flows than if they were constantly having to go in and out of bank accounts that are very difficult to obtain in the Bitcoin world. So Tether has already proven, at least in that narrow use case, that there's demand for this. There's a functionality to it. Now we're seeing significantly higher demand, both for Tether, but for a bunch of other ones that are more heavily regulated inside the US. There's things like USDC and PAX and others. All of them are seeing increased demand right now amid this whole global dollar shortage. So there's a theory that it's starting to emerge as a form of payment. In addition to the fact that we're seeing, and I've just been working on this for a column I'm writing about how there's a demand for stable coins in developing countries right now, and I think that's very important. There's other forms of stable coins, though. There's one called DAI, which is an outcome of a much more decentralized model. This is not one that has reserves behind it, but it's an automated collateral system where it's based upon a system of lending, but the outcome of that lending, when you put up, say, 150% of the value of the loan in Ether, is to tie a token that is issued against that loan to the fixed value of, say, the dollar, and as the collateral behind it is adjusted, depending on the volatility of the underlying Ether, it automatically adjusts itself within that system. And so there's this automated system behind it. I feel like that system one day could easily get gamed, but it has functioned pretty well. There's been some very interesting developments around DAI as a payment vehicle. I don't know how scalable it is, but it's truly attempting to be much more of a decentralized solution. And then there's these other synthetic solutions that companies like Abra have created and others that are all about a trading mechanism behind it to also give this stability value to some level of account management to the owner, with Bitcoin or something like it as the underlying liquid asset that's used as the tradable function. So it's all creating either a synthetic or a real token that you and I can trade back and forth and treat as if it were a dollar or an item of gold. It could be used, some of these things are actually backed against gold. So it would turn gold into a tradable currency, albeit in tokenized form.
Very interesting thoughts, Michael. I thank you for coming on the show today and sharing your thoughts with us.
All right. It's my pleasure, David. Thanks for having me.
Michael Casey of CoinDesk joins us today, and I'm David Lynn of Kitco News. Thank you for watching. Stay tuned for more.